Hello and welcome. You're watching Too Sharp with ET. I'm Neha Vashisht Mahajan. Let's look at the two big stories moving markets and diplomacy today. Sensex plunges nearly 1300 points after Monday euphoria, and India strikes back at US steel tariffs at WTO. Let's start with the first one. The Sensex fell 1,281 points or 1.55% to close at 81,148, while the broader Nifty 50 dropped 346 points or 1.39% to settle at 24,578. Total investor wealth shrank by 1.3 lakh crore rupees, bringing BSE's market cap to 431.27 lakh crore rupees. That's a sharp reversal after Monday's nearly 3,000 point surge. So what triggered this sudden slide? 5 reasons behind the sudden market reversal. Number 1, profit booking after a massive rally. Monday's 4% jump was the biggest in over 4 years. On Tuesday, traders took money off the table. The rally was not led by institutional investors. Only 2,694 crore rupees came from FII DII buying, said Dr. VK Vijay Kumar of Geojit Financial Services. He also added that the rally was driven by HNIs and retail short covering. That suggests limited follow-through from big players. Number 2, US-China thaw not as bullish for India. Trade truce eases global stress, but it dampens the China plus one narrative that benefited India. Investors reassessed India's short-term gains from supply chain diversification. Number 3, oil prices add to pressure. Brent crude hit $64.74 a barrel, while WTI was at $61.77 a barrel. Both the benchmarks rose over 5.5% in the past 2 weeks. Monday alone saw a 1.5% jump, highest close since April 28th. Higher oil is equal to higher input costs, which means pressure on macros. Number 4, US Treasury yields climb again. 10-year yield rose to 4.457%, up from 4.25% in March. Higher US yields make American assets more attractive. Emerging markets like India see capital outflows. Number 5, heavyweights drag the market down. HDFC Bank, Infosys, ICICI Bank, Kotak Bank, TCS and Reliance all declined. These 6 stocks alone wiped out over 500 points from the Sensex. IT stocks saw steep profit booking. Infosys had gained nearly 8% on Monday, fell today. TCS had gained 5%, also fell. Final thought, from record highs to rapid drops. Markets reminded us today just how quickly sentiment can shift. Now coming to our second story, India is hitting back at the World Trade Organization. On Monday, New Delhi proposed retaliatory duties on US products, target counter the 25% steel and 10% aluminium tariffs imposed by Washington. India told the WTO that US safeguard measures violate trade norms. The US never properly notified the WTO. These tariffs harm $7.6 billion of Indian exports, said one official. India seeks to recover $1.91 billion in lost trade value. So what's India doing? Proposes higher duties on selected US imports. Says US measures breach GATT and agreement on safeguards. Reserves right to suspend concessions within 30 days. Why now? The US imposed 10% reciprocal tariffs on Indian goods last month. Higher tariffs of 26% on India are on hold until July 9th. India and US are also negotiating a bilateral trade agreement. The tariff issue will likely be discussed during Indian trade reps' visit to Washington next week. From market mood swings to global trade spats, Tuesday brought a dose of reality. Euphoria gave way to caution in the markets, and India's trade fight with the US, well, it's not over yet. Keep watching the Economic Times for more.